It's about that time of day again. Back in the action once again. Hope you guys had a great day out there. Great to be back here with you all once again. It's about that time of day again. Time to get back to work. It's Tuesday evening. It's July the 23rd, 2019. My name is Joseph, by the way. And as always, welcome back to your nightly newsletter. Now, just in case you forgot since last time, my name is Joseph again, and I help traders find high-quality trade setups using a real simple three-step trading strategy that we teach and trade together every morning in my trade room. But my job tonight's a little bit different. My job tonight is to find the best levels of support and resistance, identify the best setups, and of course, the overall opportunities we're looking for tomorrow. That's Wednesday's trading session. And we got a lot to talk about tonight. We'll talk about the news here in a moment. We got a lot of news coming out Wednesday, Thursday, and Friday that will affect these markets. We'll talk about that in a moment. We'll also grab the oil, S&P, Nasdaq, gold, and euro. Got a lot to cover here tonight on this video. I'm going to jump in first on the black gold, the Texas T. We just came out of the API report just a few minutes ago, and this price is tearing higher here. Anytime I see a strong move in one direction, I always know the pieces I need to put together for a great high-quality setup. Let's dive into this oil market, the black gold, the Texas T, and let's take a look at what we have going on here this evening. First of all, great job. If you watched last night's newsletter, you're focused on buying the lows of that trading range today. Great job. I got a lot of emails from you all here this afternoon. It was great to open up my email box this morning. You guys sent me so many great emails, and I love the fact that everybody was watching last night's newsletter and did well on that today. So great job on that. But we're only as good as our next trade. So we can't let the winners, right? Can't let the winners make us lazy here. Let's get back to work here. Where are we right now? Well, we know we are bullish here, right? We know we're bullish here on the oil. And what do we know about this bull market? It's a real strong, right? Strong move as we go. Anytime we see a real strong move in one direction, we always know we're looking for that second leg going in the same direction. So we know we're bullish here right now on crude. We know we want to be a buyer, but we're running right into a major level of resistance. So what I want to do is I want to buy a pullback here right now. That strong momentum tells me that I should be able to rely on a second leg going higher. And of course, I'm looking for a low risk, high reward setup. We talk about these all the time on the newsletter. I've got my levels of support down here from 88 to 56. And really, it's all going to depend on the type of pullback that we get. I've got 3, maybe 4 different patterns to keep an eye on as we get that pullback here on crude. I'm going to talk about all of those patterns. I'm also going to talk about what if we end up back into that range here. Remember that range from earlier on in the week? Yeah, there's a good possibility we could end up right back into that range. So at what point do I want to start selling this market? We'll talk about when this market becomes a short seller's market as well here for tomorrow. We got a bunch of news tomorrow for oil, so definitely make sure you stay tuned on that. We'll talk about the buy side, the sell side, and everything in between. Over on the S&P here tonight, boy, the S&P is really the tale of two patterns here right now. It really is. There are 2 main components on this chart right now in the S&P. One is this spike and channel. Spike and channels are very common patterns that tell me to go into the base of that channel, right? But look where the base of that channel puts us. It puts us right at the top of that trading range. We are going to have to thread the needle here to be a buyer on this S&P. But I'll tell you right now, if this thing sinks a little too far, like the Nasdaq, I'm going to grab that in a second, right? We could be looking for this thing to collapse back down into that trading range. I've got a great plan here for both the buy side in the short term. And of course, I'd be lying to you if I said I wasn't thinking about shorting this sucker back down into that trading range. We'll talk about the whole entire plan in great detail tonight on the S&P. Over on the Nasdaq tonight, yeah, I'm looking at you, Nasdaq. They clearly run this thing up and then dump it right back down into that range. The Nasdaq, now this is another example. 2 main structures here, 2 main chart patterns. One, lining up these highs down to that low. I'm expecting a lot of traders are going to be looking at this as a chance to buy. You know, bull market overall. It's been bullish, since Sunday night, for crying out loud. So it's been a very bull run going higher here. They're flirting with the tops, though, of this trading range. Yeah, wah, wah, wah. That range is not going to be easy here, because you can look at it here. I'm going to see this buy. I see buyers coming in trying to buy right into the top of that trading range. Now, I'm not opposed to being a buyer on this, but I've got to be very, very careful. I'm looking for a very specific buy setup to be a buyer off of this low. That buy setup, we'll dig into more details here in a moment. But at the same time, though, I'm really looking for that shot here right now to sell this market back down into that trading range. I'm going to put all the pieces together here on this Nasdaq in just a few moments. Before we get there, though, let's talk about gold, the yellow metal. Boy, what a brilliant nested strong move down. One try, two try, right back up, right into that trading range. Again, if you were paying attention last night on the newsletter, really good job on that. I got a bunch of emails, got a bunch of hits on social media from you guys this morning about that gold going back into that range. Well, apparently the range isn't the most important thing anymore. They go back up, they give the range a little how you doing, and then back down we go again. So we have to assume at this point now those bears are hunting for a retest of that low. That's kind of the only thing right now that makes any sense about this move, right? This strong move down, strong move up, strong move down. You may also look at this and say this is one big range. Right? Could also be one big range. So it could also be running back up in. So we got a couple things we need to be prepared for here. What do we know right now? We know we're bearish overall. That bear market tells me, that bear trend tells me, I think I know where they're trying to go here, back down to that 14.6. I'm going to find some key levels of resistance, mark up those lows, mark up those highs. I've got 2, maybe 3 different patterns to sell off that high on gold. I'm also going to be watching how this pullback looks, because that may be the signal we need to flip this around and try being a buyer going back into that trading range. I'm looking for a short in the short term, but with that pullback, I'll tell you exactly what you want to be looking for here to know if you want to be a buyer instead of a seller on this gold tomorrow. So make sure you stay tuned for more on that. And then last but not least, over on the euro, you can definitely tell the euro is summertime. You can certainly tell this euro is suffering from the summertime slowdown. Very common this time of year. You get these low volume moves where, kind of while the cat's away, the mice will play, right? Kind of runs lower there. We're right around that big round number at 12,000. We get the ECB later this week. It all makes sense, right? I wasn't expecting this to go straight down there, but that was a, summertime session to the max there. I'm going to call this a spike in channel right now. That strong move down right into a spike in channel. Spike in channel tells me very specifically here, I want to go up and sell this market back down. There is a chance here this thing may just keep going sideways here, right, inside of a range. And if that's the case, we'll talk about some new patterns to sell this euro as well. So looking to be a seller here on the euro. We got the gold, right, looking to be a bear here in the short term. Nasdaq, I'm looking to be a seller. I will look to be a buyer on the Nasdaq with the right setup. S&P is... It's walking on thin ice right now, that S&P is. And of course, oil is setting up for a nice, right, pullback here for us to put the piece together, going higher here for tomorrow. Speaking of tomorrow, though, before we jump in and put all the charts together here in tonight's video, I want to make sure you never miss another great newsletter. Now, you may not be aware of this, but right before I publish this video on our YouTube channel and our blog every evening, I send an email out to our best clients on our mailing list. And I want to make sure that you get that email, because you're going to get it right as this video goes live. That way you can be the first person, right, to get your hands on this video every evening. To join the mailing list, it's very, very easy. All you need is your name, your email address. Hit that subscribe now button and I'll add you to my list. Now, please be aware, guys, when you hit that subscribe button, your job is not finished yet. You still need to go in, check your email, check your inbox, because I'm going to send you a welcome email. That welcome email will have 2 important things inside the welcome email. The first thing is it's going to be a verification link. I need you to click that verification link to verify that I've got the right email address and give me the ability and the approval to keep sending you emails every evening. Also, inside of that welcome email is a bunch of great free resources so you and I can get the most out of our time together every evening on this nightly newsletter. So don't delay. Pause the video if you haven't done so already. Make sure you join our mailing list. And guys, promise never any spam. I don't rent this information out, right? I have so many more important things to do with my time than to send you guys spam. Only the good stuff come into your inbox every evening from us here at School of Trade. And last but not least here, one more thing. Before I get into the good stuff here tonight, I need your help. I need your help. I'm always trying to make this newsletter better. I'm always trying to improve this video. And one of the things that would really help me a lot is to give me some feedback. In your mind, what do you think is the most difficult obstacle to overcome when you're a rookie trader? Post those answers in the comments section below, because I'm always trying to find ways to help new traders be more successful with this nightly newsletter. You know, if you could go back in time, and tell the younger version of yourself, right, some words of wisdom, what would those words of wisdom be? If I could go back, right, to that 20-year-old, right, Joe, and say, hey man, listen, here's what you should do differently so you don't make these mistakes, what would you tell the rookie version of yourself? Or maybe you are a rookie. And in your opinion, what's the biggest obstacle standing in your way from becoming confident and consistently profitable? Do me a huge favor, drop the feedback in the comments section below. That means the world to me when you guys give me the feedback. Appreciate that every time you do it. And of course, while you're down there, give me a thumbs up on the video tonight. If you tune in every evening and watch this nightly newsletter, give me a thumbs up on this YouTube video, because you'll be amazed at how far that goes to help me expose this video to other traders on YouTube. And they can certainly use this help as well. So I appreciate the feedback in the comment section. I appreciate that thumbs up. And I also appreciate every time you guys call me here in the office. Don't be afraid to pick up the telephone and call us here in the office. We have a toll-free phone number. I have a live support tool over in the upper right-hand corner. And I'm going to date myself here real quickly, but I actually talk on the telephone. I know. No texting for me, right? Call the toll-free phone number. I'm going to pick up that phone call, answer all your questions. You know, questions like, what are the best brokers? What are the best data providers? Charting software? Where to get a good trading computer, right? Are some easy questions we can help answer. That way, at least you get the right information when you need it the most. Or maybe you want to know more about our free trading classes or our free pass to attend our trade room. Call that toll-free phone number. My wife, Megan, and I are always here to help every step of the process. But for now, though, until I speak with you on the phone, right, until I see in the comments section, let's get to work here tonight. Always appreciate your valuable time, and I want to make sure we push through here quickly here with you guys. What's tomorrow's schedule looking like? Tomorrow, Wednesday, July the 24th. Now, I really don't think we're going to get enough information just from this calendar here. You'll notice here we do have some big news tomorrow, right? New home sales and the petroleum status report tomorrow. But I want to make sure I show you guys kind of how this week is going to look. So what I did was I kind of created a little bit of a breakdown here Wednesday, Thursday, and Friday this week, because we are going knee deep into earnings season, which is going to impact the S&P and the Nasdaq. So tomorrow's Wednesday, and of course on Wednesday, tomorrow morning, we get the new home sales number at 10 o'clock Eastern time, and then we have the crude oil inventory report at 10:30. Remember, if you're an oil trader, 10 o'clock tomorrow is really about as far as you want to push it until after that news comes out. I know, the inventory report usually produces some big moves on the chart, but those moves are unpredictable. They're illiquid. They're not very safe to trade. And as I always tell my clients, there are so many good setups every week on oil. You don't need to risk your entire trade account, right, by trying to wrestle, right, those inventory reports. I'm not a big fan of trade news, because one bad mistake and you can blow your entire account. It's just not worth the risk. You're more than welcome to gamble with the inventory report tomorrow, but if you want my opinion, my personal strategy is, right, there are so many great times to trade crude oil during the week. after 10 o'clock, usually between about 10 o'clock and 10:45 on Wednesdays. Before the news comes out, it gets very slow, and then after the news comes out, it gets pretty crazy after that news comes out. So be aware of that tomorrow at 10 o'clock Eastern time. Then what else do we have going on? Tomorrow, earnings, and more earnings. And earnings are going to dominate the equity markets over the next 72 hours. Tomorrow, the big names are Boeing, Caterpillar, Ford, Facebook, AT&T. So as you can imagine, companies like Boeing, Ford, right, and Caterpillar, AT&T, they're going to be what? They're going to be S&P based. Then you got Facebook, right? The book, of course, will be based on Nasdaq. And since the Facebook, right, obviously is a big stake of the Nasdaq may get a little bit funky here, right, tomorrow. These earnings will be happening before the open and after the close. They're not going to happen during the day. So we may see markets very slow. We may see markets just fine, but usually when there's earnings, the markets tend to be a little bit lower volume as traders are waiting for them. Which reminds me, right? Another thing tomorrow, we got that Mueller testimony ahead of that House Judiciary Committee. Now, I have no idea how much this is going to impact the markets, but I have a feeling, though, if we do see some sluggish price action ahead of those earnings reports tomorrow afternoon, we may see everybody kind of tune in, right, to watch the circus come to town, right, with that Mueller testimony on Capitol Hill tomorrow. So be aware, there's a lot going on tomorrow, right? We got those big news reports at 10 o'clock and 10:30, right? 10 o'clock looking like a pretty good time to be trading tomorrow. Earnings reports. The earnings reports are tough, right? Because Facebook will report after the close, right? And I believe Caterpillar, Boeing, and Ford are going to be before the open. So we definitely are going to have to keep our eyes open tomorrow to see how the markets respond to that. And of course, with Mr. Mueller hitting the stand tomorrow, we'll have to wait and see how the markets respond to that. Later on in the week, don't forget, Thursday is the ECB announcement, so don't be surprised if gold and euro take a bit of a volume nosedive here in the next 24 hours. And of course, right, on Thursday, we hear more from Nasdaq, right? Amazon, Google, Intel, and then of course on Friday, same thing, right? We get some big news in the morning and earnings, of course, after the close. So we know there's going to be a lot of earnings reports coming out the next few days. I'm thinking about Nasdaq, I'm talking about S&P, and of course the ECB announcement, gold and euro on Thursday. There's a lot going on this week. That's why I would highly encourage you, make sure you take a stop into our trade room this week. We open up our trade room 8 o'clock Eastern time, Monday through Friday. We'll be there tomorrow morning to help navigate around some of the craziness that we are expecting to see here in the next few days in these financial markets. Let's get going here, though. Now that we know our schedule here for tomorrow, we know how crazy tomorrow is likely going to be, and of course how sluggish tomorrow may be ahead of those earnings reports on the S&P and the Nasdaq. Let's jump in and put the plan together for as we see it. First of all, starting off on oil tonight, we get some crude, then we'll go S&P, Nasdaq, gold, and euro. What do we know about oil right now? Let's start with what we know. What do we know? We know we're bullish. And this isn't just any bull move. This is a very strong bull move. Anytime we see a strong move in one direction, we almost always see a second leg. That's important information because now I know I want to be looking for that buy, right, on that deep pullback, right, on that pullback. And with that bullish market, I want to find levels of support. So what I've done is I've marked up that prior swing at 56, and of course I've marked up these highs up to that low, and this kind of creates my buy zone down here, my battle zone. So ideally, I'm looking for that pullback down inside that buy zone. And that's important that we do get a pullback, because what else do we know right now? We also know that the crude oil market is also, of course, running hot here. 1, 2, and now 3 legs up. Now, what do markets that go 3 legs up? What is it important? It is relatively important, because oftentimes when markets go 3 legs up, they oftentimes go sideways, the following day, because we've gone so far that nobody wants to buy, kind of in quotations, right? Nobody wants to buy high up here. Now, obviously in the big picture, we're not that high on the chart, but in the short term though, 3 legs up tells me by definition, we are relatively high. So I do have to be prepared for a potential, and again, we know we're at resistance up here. I do need to be prepared here, mentally at least, for a possible trading range here. At the same time too, tomorrow's inventories, right? Tomorrow's inventories, and so we know that anything can happen here. We may see a shot higher here. Speaking of a shot higher, what else do we know? We also know we have a channel forming here on this chart. Beautiful rotation, as you can see, and those buyers are going to be trying to get up to that channel high. And, at that point, they may get a run, right? I mean, look at this. This is kind of where that whole big move down comes into play here now. If we get the 1, the 2, and this thing runs, this could really pop back up to that 60 area here. I'm not about ready to call this thing back to 60 right now, but with big news tomorrow morning, it is definitely a possibility. So I definitely want to be ready for, all 3 of those scenarios, right? What if we do get the range? What if we get the pullback? And what if this thing just keeps on popping higher? So we know where we want to buy that pullback. Let's talk about pullback here first. I'm looking for that pullback off the high. And ideally, I want to keep that pullback above that 56. That's going to be a real important milestone, I think, just because of the way it kind of bounced off it there. Obviously, this is that prior swing we're talking about at 56. What I'm looking for here is I'm looking for a pullback off of that high. Now, if I can get that pullback coming off that high, what's going to happen is a lot of sellers are going to assume this market now is turned bearish. And they're going to try to sell into that moving average pullback, right? Moving average comes over. The sellers here will try to come in and they'll try to sell the sucker back down into that trading range. Now, at that point now, the market's not bearish though. Right? That strong move higher tells me we should get another leg, and I'm going to anticipate those sellers being trapped on the wrong side and buy right into those stop losses. That sets up for what we call a failure setup. Now that failure setup, you're not going to want to chase it higher, right? Once you're in that failure, now wait for the pullback. The pullback's a great way to add to your position, make a little more money on the way back up to retest that high. Where's my target? Target's back up to retest the high. This is a classic combination setup called a failure into a pullback combination. It starts off with a strong bull move up. That sets the table for us now. With momentum, I want to wait for that deep pullback, get that moving average coming over. Sellers try to sell into the moving average, right? Thinking this market's going back into that trading range. It's not a bear market, though. It's a bull market. So once I see those sellers try selling off the moving average, now I know where their stops are. I'm buying into those stops. I'm buying that pullback, right, for that run going back up to retest the high. That's going to be if we get that deep pullback. Now, at the same time, though, what if we don't get that pullback? What if we end up sitting sideways up here, right? We go up, we pull back, we go up, we pull back, we're going sideways. Again, we're 3 legs higher right now. Anytime I see a trading range on the chart, I first ask myself, what's the bullish or what's the directional bias? In this case, it'll be a bullish bias. At that point, I'll use the size of that range to create my support levels below. I don't know enough about it yet, right? We don't have enough information yet, but what I will look for though is once I see that trading range, then I'll update this buy zone tomorrow morning in our trade room, and then we look for that 2-try failure pattern. Look for the move going lower, wait for that moving average to come over. Sellers, let them sell off the moving average. You want 2 tries, 1 try, and 2-try. We call this a 2-try failure pattern, and of course we'll look to buy as the market now runs back into that range before we get back into that trading range. That's the plan if this thing goes sideways. Now, sometimes the market goes sideways, right? Sometimes it goes sideways and then breaks through that high. So what would that look like? What would a breakout to the high look like, right? And we do go sideways here, but then we see the news come out tomorrow, right? News comes out and we run. Now, what's the goal if it runs? If it runs, there are two ways to trade a breakout as it goes higher through that range. The first one's more conservative. Ready? 1, 2, 3, breakout. Mark the high, mark the high, mark the low. That creates your new channel, and we're buying off that channel. Again, it's called a 1, 2, 3 breakout. Strong move up, pull back, strong move through. Got to see that strong move break out of the range. Once you get it, mark up the high, mark up the high, mark up that low, and that creates that sweet spot now, and that's where we're looking to buy that pullback. Again, that's the more aggressive way to do it. If you want to be a little more conservative on it, right? Sorry, that is the more conservative way to do it. If you want to be more aggressive on it, look for that strong breakout, right? That's the key here. Strong move. This has to be a very strong move up. Then 2 try breakout pattern. 1 try for the bears. 2 try for the bears. You want higher highs in those 2 tries. Once you've got those 2 tries, now you can buy right into those stops, right? Good example back here, right? We're in that range. Market jumps up, right? 1 try for the bears, 2 try for the bears. Everyone piles on that second try that fails to go back into that range, right? So same thing as we go higher here. Now, speaking of which, what if we do keep going higher? What if this thing just keeps on going? If it keeps on going, we keep waiting, right? We keep on waiting. If this thing continues here now to keep running higher, if it continues here to keep running higher, I'm going to adjust this channel. I'm going to move this channel up and keep looking for that pullback tomorrow morning. That's the one thing that's going to be a little bit difficult here. If it does keep going higher here, if we keep on running higher, what I'll do is I'll adjust this channel, mark up that channel a little bit steeper now, wait for that pullback, wait for that failure, right, into pullback. And again, that combination setup is one of my favorites, that failure pattern, right, into pullback pattern and a retest of that high. So those are going to be the 3 main components, right? Do we pull back into a seller failure and back up? Do we go sideways here, right? Get that pullback, failure, and up from there? Or do we get that breakout going higher that I mentioned? Or do we just continue going higher here, adjust our channels now, and just keep staying patient here right now for that pullback into that failure, right, and go up from there? Again, it's that pullback. Those moving average comes over. Sellers try to sell off of it. It's not a bear market. We're buying into those sellers' failure. We're buying into that pullback. That sequence is very, very common. Speaking of that sequence, you know, I've got hundreds of hours of real setups exemplifying this failure into pullback, right? You guys will love it. I'll put a link in the upper right-hand corner for it, for the free trading course. As part of the free course, you'll learn my 3-step strategy, which is the same strategy we use in our trade room. You'll learn my 4 favorite entry setups, right? The pullbacks, the traps, the strength, right? And the failures. And you'll also see hundreds of hours, right, of examples of these setups from our favorite futures markets. So grab that free class. It's linked up in the upper right-hand corner. And don't forget, when you register for the free course, I'm going to send you an email to deliver the first lesson. And so you got to make sure you give me a correct email address, and of course, check your spam folder if you don't see that email from me, right? That would be the big thing. If you don't see the email, check your spam folder. Sometimes that spam filter, right, holds up those emails. Now, the one thing we haven't talked about, though, is how do we sell this market right now? At what point, right, would I want to sell this? There are 2 types of sells that I'm looking for here tomorrow. One is going to be a strong pullback, a first try for the buyers, a second try for the buyers, a trap and go. This is called a crown reversal pattern, and it's by far my favorite reversal pattern, right, to use. You'll notice at that point the market will still be bullish, and so that is technically a reversal pattern. So again, right, we know we're bullish. Let it come back. Let these buyers try once. Give me a lower low, try again, and I'm looking for that trap, right? That trap. Again, we call this a crown reversal pattern. That's one short selling opportunity I'm watching here for tomorrow. The second one is a lot more conservative. We're going to look for that strong 1, 2, 3 reversal, mark up that low, mark up that high, and sell off the top of that channel. So let's say, for example, right, we get that pullback. We go back below the moving average. the buyers are looking for those sellers to try and fail, as we mentioned earlier, right? But what if they take it lower, right? What if they do run it lower? If they run it lower now we know what's up. We're going back into that range down to 56. I'm going to mark up that low now, use those lows to find that channel, right? And my goal is to sell off, right? Sell off top of that channel because I don't want to sell inside of that trading range. So 2 sell patterns to keep an eye on. One of them, of course, more aggressive. The other, a lot more conservative. And we've got 3 kind of scenarios we're watching right now on the crude. Don't forget, tomorrow is inventory day tomorrow. So be careful out there, right? Be careful out there around that 10 o'clock hour. And again, make sure you check out that free class I mentioned to learn more. Next up here, how about some S&P? What do we know about the S&P? There are ultimately 3 things that we know about the S&P right now. First one is we're bullish. Pretty obvious there, I think, right? We're obviously bullish. We know we have this strong move up. Second thing, spike into a channel. Spike into a channel. Spike into a channel, right? Spike and channel. What does a spike and channel tell us to do? Spike and channels tell us to find the base of that channel, right? Think about where that channel kind of runs into that spike. And buy, right, and buy that pullback. Spike and channel is the second big clue. What else do we know? Yeah, we also know we have that trading range. That trading range. The trading range really, in my opinion, is the most important clue right now. Remember that range from last night's newsletter? This trading range, what does that trading range tell us? That trading range right now tells us that if we're not careful here, these buyers, we're going to end up getting sucked back into that range. And once we're in the range, the odds are pretty good. We're going to end up back on the opposite side of that range. So honestly, by the end of the day tomorrow, we could be back into the middle of that range, or even worse, back down to that 29.80 area for tomorrow. So we know we're bullish, right? I'm not quite ready to sell this market just yet, but we do know though, if this thing keeps going lower here, if we pull back any further, we've really got a problem on our hands because now we're running right into the top of that trading range. Okay. So here's the plan here for tomorrow. We know we're bullish and we know we have this spike and channel. Okay, that spike and channel is a big, big clue. Spike and channel, of course, let me zoom in on this a little bit closer here for us. That way you guys squint and I don't need to get too crazy on this. Okay, so we know we're bullish. We know this area right here is major support because that's a prior swing, pull back, right? I call these reversal lines. You can see, of course, they've already come back, hit it once. So you know everybody's watching that area here right now. The reality is, though, is with that spike and channel, I've got my spike and channel. Spike goes up, pulls back. We know where our buy zone is, right? Right at the base of that channel. And you'll notice it is so conveniently located right at the top of that trading range, right? And we'll talk about what happens if it collapses back down in here in a moment as well. So we know we're in that area right now, but look at the size of that candle right there. Okay, that candle is a little bit of a spook for those buyers. But more importantly, that candle gives the sellers way too much confidence right now to sell this market. You know, one of the things I've learned over the years is to kind of step back and think, what would the rookie version of myself be thinking right now? And I would imagine a lot of rookies, I know that I would have looked at that red candle and said, oh, well, apparently we're done going higher. Let's sell this. So I'm anticipating we're going to see some sellers here coming in at this moving average, right? Put yourself in the shoes of the rookie trader. If you didn't know there was a range, if you didn't know that if you didn't know that this strong move up was important, right? What would you be tempted to do? You'd be tempted to sell this market back down into that range, and that's exactly what I'm hoping for. I'm hoping these sellers try to sell this thing back off that moving average. It's a bull market right now. We cannot sell it till momentum turns, and of course with that now, I know exactly where those stops are. I can buy into those stops. I can buy that pullback and finish off that measured move target waiting overhead. So again, we know we have a spike in channel. We know that spike in channel tells us precisely where we're looking for that buy. We also know that big spook, that big red candle is probably going to tell those bears, right? Hey, you could try to sell this thing back down into that trading range, and I hope they do, because if they try to sell off that moving average, once we see those bears sell that pullback, now I know exactly where those stops are. I can buy into those stop losses. I can buy the pullback. And where's my target? My target at that point is up to hit that measured move. That's gonna be the setup here, right, for the buy on the shallow pullback. Okay, now what if the market pulls back further than this? Yeah, now we've got some trouble, right? Now we've got some trouble. At this point now, yes, we are still bullish at that point, but now we're running right back right into that trading range. So how do we buy this? Let's talk about that first, right? How can I kind of survive that nosedive? How do I buy off of this low? Because you can definitely see if I line up these highs, bring it down to that low, we have a great looking channel here. In fact, if you could line up these right to that, this could easily be seen here. Put a midline right in there, right? I mean, this could easily be seen as a nice big bull channel here. And so we could get a chance to buy off of that low. But here's the problem. If we pull back to the low of that channel here now, right? If we pull back to the low of that channel now we got that trend line on the way. So here's what I'm going to do. If we get that deep pullback, this is likely going to feel very bearish. It won't be bearish already, but it'll feel very bearish. I'm going to look for a little more conservative entry pattern on this. I'm going to wait for the sellers to fail, which is what I would normally do. But because this is right at the top of that range, I'm going to wait for these sellers to fail, then look for that up, over, and go. What I really want is I want to see some proof. And you don't hear me say this very often, but because of the location of that failure, and again, if there wasn't a range up here, I'd be saying, oh yeah, seller failure into pullback combination, back up to retest the high. But we are at a bad location for it. So you're more than welcome to take that seller failure if you want it. I'm going to skip that one most likely tomorrow unless it's something very convincing on the chart. But most likely that will not be the right pattern. It'll be the one coming shortly thereafter. Now, sometimes the market shoots right back up after those suckers, right? So if it does shoot right back up, look for a trap. Up, 1, 2, trap, and go. Right? If it shoots higher here, you know what I mean, right? If it just takes off to the upside like that bad boy, right? If it takes off to the upside, now I want to use that 1, 2, get that trap, and buy it up from there. All right, guys? There's a couple scenarios to keep an eye on if we do get that deep pullback. Obviously, too, if we do collapse back down in, we want to start thinking about how we can short this market. Now, what I'm looking for here is your classic failure pattern, right? I'm looking for that market to come over. I'm expecting buyers here right now to want to buy off that low. And now anticipating that rookies will try to buy a little bit too aggressively here coming off of it. What I'm hoping I'll get here is a failure off of that low so I can sell into that failure. Okay, so again, pay attention here to these two different patterns. One is going to be a strong move down. I see the sellers try and fail. Okay, this is the key difference here. Try and fail, then strong move up, pull back, and go. I see sellers fail, then I wait for proof, and I buy the pullback. If we sink into the range, though, right now that moving average comes over. We pop back up. Buyers are likely going to try to buy that pullback. But look, they're at a horrible location for it. In that case, I'm looking for the exact opposite pattern, a buyer failure. Let those buyers try to buy that pullback. Let them get aggressive in there. I'm going to be looking to sell right into those stop losses to finish this move off. Another option here would be we run, right? And we really start running hard, right? We run hard here. Another option would be strong move down, 1, 2, trap, and go. This is not drawn to scale, obviously, but if we see this thing take a run lower, if it really runs lower, let those buyers, let them buy once, let them buy twice, get that trap, and sell back down into the middle of that trading range. So once again, get a couple sell setups. It really all depends on, do we stay, right? Can we get underneath that range high here? That's going to be a big part of this plan for tomorrow. So a quick recap here, right? Shallow pullback, failure into pullback, back up to retest the high, or do we shoot lower? Do I see the seller failure, then up and go? Or do we get that strong move down, bounce, buyers try, and failure back down in? You can see those are very similar, but they're very different. One has a seller failure into a bounce. The other is just simply buyers trying to be too aggressive, buying off that low. Think about how you, as the rookie version of you, how would you have traded it right before you started learning with me, before you got all these valuable lessons learned? How would you respond to this? Most rookies here will try to buy that pullback here, and that's why I'm looking for that failure going back down into that trading range. S&P looks great. I don't know how much of an impact those earnings reports will have tomorrow, just because of the fact they happen before the open and after the close, and it is a summertime Wednesday tomorrow as well. We also have the Mueller testimony right tomorrow morning as well. So a lot of this is going to be based on how does the personality feel. And again, like I mentioned earlier, tomorrow morning, 8 o'clock Eastern time, let's do it together. And then remember, I'm just drawing on the screen right now, but if you want to see hundreds of examples, right, of how we apply this strategy to our favorite futures markets, grab that free course in the upper right-hand corner. I'll also put a big red button for that course registration right below the video tonight on our blog here at Sideways Market, so grab that as well. Now, over on the Nasdaq. Now look at the Nasdaq. The Nasdaq completely has, at least in my opinion, the Nasdaq is playing right now with cards up. It's pretty easy to see what's happening right now on that Nasdaq. What's really interesting though is the Nasdaq took from 140, right? 140 all the way up until 415. Right? It took about 3 hours to climb the ladder, and it took approximately 15 minutes to give it all back. So we can definitely tell this market is fragile. It is fragile going higher here right now. You know, as they say, right? Took the stairs up, right, and the elevator down, or the escalator down on this one. So now you can see the difference here between the S&P and the Nasdaq. What do we know about the S&P? What do we know about the Nasdaq right now? We know we are overall bullish. Right? We know we are overall bullish, but what did you see happen in the short term? Look at the strength of that move down. Now, anytime we see that much strength, we have to assume what? We're going to get a second leg. And that second leg, look where we are right now. Second big clue, we're right at the top of that trading range. So from what I can see right now, we've got, yes, an overall bull market, but no, I do not want to buy this market right now, not on this pullback. Way too strong. That pullback is way too strong for me to want to buy this thing right now. So in order for me to be a buyer, I've got to wait for these sellers to get what they were looking for, then start to climb back higher here. So being a buyer right now is, in the short term, going to be very difficult here to do it safely. You know, obviously this is the Nasdaq, right? Summertime trading, anything is possible, but historically speaking, anytime you see a strong move in one direction, you know you're going to probably get that next leg lower. So we know that, and again, we know we're right at the top, right, of that trading range. So all we have to do is just collapse back down in, right, and get a nice big profit on the way back down. So what's the plan here for tomorrow? I want to be a seller, right? Sell first, buy second. What's the plan here on that? So being a seller, it all depends on really what happens here in the next few moments. The fact that we close right back into that trading range is the big clue. So at this point now, strong move down. What I'm hoping for is, I'm hoping we get just outside this range again, right? I'm hoping we get just outside the range, nice little failure, and drop it right back into that range is what I'm hoping for here. So strong move down. I'd love to see this thing try to run higher here, right? I'd love to see this thing try to run higher. Get it trying to run higher. Let those buyers try to buy the pullback off the moving average. When that happens, obviously now we know where stops are, and I can look to sell into those stop losses. So with that strong move down, get that pullback, moving average will come over. Buyers will try to buy the pullback. I'm looking to sell into their failure, sell on that pullback, and run this thing back down into that trading range. Now, we may not get that pullback. We may just keep collapsing back down. If we do, keep an eye on this no trade zone. This no trade zone, as you may be able to visually see, is 1/3 of this trading range. 1/3, 1/3, 1/3. I call this the rule of thirds. Anytime I have a wide trading range, those wide trading range tell me to break it up into 1/3 increments. So knowing where that 1/3 is in the middle, if we do make a run lower here, I've got to be very careful trading short into that middle. If we do run lower, look for that 2-try trap high on this. If we do run lower, look for that 2-try trap high. That will probably be the most reliable. You can see kind of an example of that right here, right? As we go 1, 2, they're waiting to sell it back down into that range. Very, very similar pattern is what we're looking for here on that Nasdaq. Again, because you don't want to be trading in the middle, look for that trap pattern and sell up off of that high. So I think two relatively easy ways to sell this market. One is going to be, can we get that pullback? We know that momentum is very strong. So with that, we should be able to get that next leg lower. I'm looking for a buyer failure pattern to sell this thing on the short term. If the market sinks back in, if it sinks back in here, I don't want to trade inside that middle. I'm going to use that same, right, kind of 2-try failure pattern, right? Let those buyers try once to buy it. Let them try twice to buy it. And the only reason why I let them try twice is just because I need some level to use for my trap. I need something I can work with. You know, we all need some structure to work with. That's how traders, you know, they create their trades, right? We kind of structure our trades based on the levels of support and resistance that we see on that chart. At that point, though, it's a trap high, so I avoid selling into that high. And again, I realize I'm using a lot of terminology you may not be familiar with right now, which is why I encourage you to grab that free course in the upper right-hand corner and learn with me, right, about how to make the most of this time together on our nightly newsletter. Now, how do we buy this market right now? What would a bull market look like? How can I safely buy this market? Well, first of all, we have that strong move down. So we're going to have to see these bears. They're going to have to try once. They're going to have to try twice. And then we can be a buyer going back up from there. So if we do, you know, hey, maybe we get lucky. The big thing about this, though, is we got to make sure we're doing it above that range, right? That's going to be the hard part here. So if you think about where that range is, let's make that range like right. Let's make it right there, right? So let's say this, right? We go up, 1 try for the bears, 2 try for the bears. You're going to want to make sure that, and we call this the nested failure pattern. We talked about this quite a bit in last night's newsletter. Strong move down. Okay, you got to expect those bears are going to get that second leg, right? Let them try once. Let them try twice. Once those bears try twice, now we know where their stops are. And now we're buying right into those stop losses for a retest of that high and probably up to complete that measured move just before that 8,000. So as you can see, there's two big differences here, okay? As we go lower, it's a 1-2 for the bulls to be a seller, right? The buyers try once, the buyers try twice to buy it up, and I'm selling into their failure. Okay, the other way I'm talking right now is doesn't have any lower lows, right? We go down, the bears try once, the bears try twice. See the difference there? These are very different, right? Because these are making higher highs where the other example is making lower lows. Let those bears try once, let them try twice. And again, you really want to try to thread that needle there and get that long up above the top of that trading range. Again, tomorrow, don't forget tomorrow in our trade room, 8 o'clock Eastern time, bright and early. And we're going to do this together here because you can see there's a lot of stuff to keep track of right now on these markets. How about some gold right now? So gold kind of surprised me this afternoon. I wasn't expecting gold to make a run back lower here right after this afternoon session, but I'll take it, right? I'm not complaining that badly here. So we know we have, right? We know we had that big run down. We had that nested failure from last night's newsletter and that run back up into that trading range. But apparently, you know, most of the time when a market runs back into a range, it's going to sit there for a while. This one kind of rejected the idea of that range and ran lower. Now, there may be some news headlines that caused that, but what do we see here right now? We see a very strong move off the moving average. The sellers clearly have momentum on their side. side. I want to be a seller on this gold right now, but I need a level of resistance. So what I'll do is I'm going to mark up these lows. Those fit like a glove. I'm going to bring it up to the highs here and try to use that high now for a chance for us to be a seller. Okay, so that's if price goes higher. If price goes lower, I've got to be careful because the objective, I assume, is probably that 14.6. We may end up through that down to that measured move. But honestly, when a market makes a strong move down like this, like it did early this morning, and it doesn't stick inside that range, these guys were trying to go back to retest that low. That's where they're trying to go right now, right? That's what we know for sure. Now, they may slide through that low and get that measured move here, but I won't be able to really easily sell down here anywhere. So I have to be prepared for that. And then obviously, right, we may also go sideways here too. Yeah, this may also end up going sideways here. You know, we got some news on Thursday. ECB's on Thursday. This market may settle in here a little bit ahead of that news tomorrow, or news on Thursday, I should say. So we got to be ready for it going sideways here as well. So kind of a classic scenario here. What if it goes up? What if it goes down? What if it goes sideways? There is definitely reasons to be concerned, right, on both of those. Now, you'll notice the battle zone here, right, prior swings. I always like to look for those hidden channel traps, right? Mark up that low, mark up that high. I always like to look for these traps, right, off a hidden channel. So I've got basically three patterns to look for the top here, right? One would be a trap pattern, the other would be a failure pattern, and the next will be a pullback pattern, right? Trap into failure, into pullback. We could get all three of those setups, right? It's a trap high above the prior swings. Remember, traps are very, very simple patterns, but you've got to get almost immediate response to them. Again, I'm illustrating them tonight. If you want to see a lot of examples of trap setups, right, in our members course, grab that free course in the upper right-hand corner. You'll see lots of examples of real trap patterns on our favorite markets. Trap patterns are simple, but you want to make sure you have the right rules in place. You'll learn more about that with the free course. And then obviously, as the market goes up, the buyers try to buy it now, will sell into those stop losses. That's your typical buyer failure in a bear market. And then last but not least, as that moving average comes over, we're selling that pullback right off the moving average. Classic example of a failure into pullback combination. So that's if the market pulls back. We get some prior swings, top of that channel, three different patterns that we're looking for here. Now, what if it keeps going lower here? If we keep going lower, we gotta be careful, right? We really do. What I'm looking for here, though, is to see, do we get a strong move down? Because right now, there's not much space, there's not much reward for the risk that we have to take. So what we need to do is we got to get a strong move through. We'd have to see a strong move and then try to get those buyers 1, 2, trap and go. It's not going to be easy. Strong move down, 1 try for the bulls, 2 try for the bulls, trap and go. That'll be the only real way. Again, it'll have to be a very strong move down. The buyers try to buy once, they buy twice, trap. That'll be the only way to really thread that needle, because there's really no way ahead of time, unless you see a strong move, that you know we're going to get that measured move, right? So if I see a real strong move down here, 1, 2, trap, again, it's not much down here, so be smart about this. This is one of those trades where if I find myself in a position down here, I'm going, okay, if I do take a setup with that little amount of reward, maybe it's a half-size position, right? It's a quarter-size position. These are the types of trades that will kick back against you. Take them at your own risk. It really has to be, though, a very strong move down to be able to get the confidence that we're going to finish off that measured move without any, shenanigans down there, right? Getting trapped on the wrong side here. What if it goes sideways here? Right? Sideways pretty easy. We may see this market start going sideways here tomorrow. If we do see it going sideways, sitting right on that level of support, once we see the range-bound market, we wait for the market to pop up. That will usually put us right above the moving average. Let those buyers now try to buy off of that moving average. I'm going to look now to sell into that failure. We call this a 2-try failure pattern. 1 try for the bulls, 2 try for the bulls, and then back down into that trading range from there. That would be if we have a range-bound market. And then obviously, right, if we reverse, what's the final step in this process? How do we buy this market? How do we buy this thing? Going to be tricky. The first thing is we've got to see a very strong 1, 2, 3, right? It's got to hold that moving average and jump up. Now, once we get that 1, 2, 3, once we see that momentum jump off the moving average, that's the key, right? Look back here. See how we jump off the moving average? That's always the key that we're turning directions, right? We go back above and jump off of it, right? You jump off the moving average. When you jump off the moving average, right? We're bullish here now. We're bullish going higher. We then come in, we jump off the moving average. See how the bears jump off the moving average there? That's how you know it turns bearish, right? So how do we know when it turns bullish? It's going to jump off the moving average. We're going to see some jump, right? Give me some strength coming off that moving average. Once that happens now I'm going to take that same trend line and see if I can't use that trend line here for what I would call a two-legged pullback setup, right? Or a kind of a breakout pullback, right? I want to see those buyers get that run up. I don't want to trade the range. I want to buy low, right? Moving average comes over. We're getting that bounce again off of that channel, right? That's the key. So differences would be we go up, the buyers try to buy the pullback, they fail, trap, failure, pullback pattern, back down, or we go up, hit the moving average, right, and jump off the moving average. Now the market turns bullish. It's that little tiny detail right there. And now we don't want to trade off in the range, wait for that pullback, and we'll buy off of it from there. So that's going to be the most reliable buy setup. We're going to wait for these buyers to take control back, then use a level of support to buy it going back into that range tomorrow morning. And then again, if we go back into that range, if we just have, let's say for example, we just run back into that range, just stay patient. Stay patient. We turn bullish back into the range, get below the range, 1, 2, try for the bears, and we're buying right back up again, right? We know we have that. We know we have that bullish momentum. We know we're back into a range. Let those sellers, let them try to make that run lower. Let them try to sell it lower here, and you'll buy right into those stop losses. Okay? That's the best way to trade if it goes right back into that trading range. We may not get the buy before we get back into that trading range. And again, tomorrow morning, 8 o'clock Eastern time, we're going to do all this together with all of our clients. How about some euro here? Euro is relatively easy here tonight. It's a very strong move down. That strong move down turns into, whether you want to call it a range, I kind of like it as a spike in channel here. Now, remind me again, guys, what does a spike in channel tell us to do? It tells me to look for a sell where? At the base of that channel. Okay, that's where the battle zone comes from. I want to be a seller up around that high. I also want to be aware that, easy come, easy go. That strong move down, there's a chance this thing could evaporate and go right back up where it came from. So I do want to be aware of that. I do want to be ready, or at least mentally prepared for it. That way I'm not being caught off guard. So first things first, if we keep going lower, just keep letting it kind of drip lower here. Let it pop up. Okay, so eventually here, if the market does want to keep on going lower, we will get that pop higher. That moving average comes over. Let the buyers try to buy off the moving average, right? It's not a bull market. It's a bear market. The odds are not very good for those buyers at this point. We're looking to sell into those failures, sell into that pullback. And where's our target? Our target will be at that point another measured move, right? 1 leg down, 2 legs down, 3 legs down. You'll want to use those same measured legs from previously in today's trading session. Now, as we go higher though, what if the buyers hold it? Right? What if they hold that pullback? What if they jump off that moving average? Remember, it's the jump off the moving average that gives those bulls the edge they need now. Now we mark up that high. We mark up that high, draw off of that low now. That creates that sweet spot, and we're looking to buy that pullback off that sweet spot. And just so you know, that pullback, if I kind of zoom in on that area right there, that pullback, here's your there's your trend line coming in. That pullback will usually be that failure into pullback combination. So keep that in mind right? As you pull back, right? Think of that failure pullback combination right at the low of that channel. So really there's not a lot we can do on this. We got to wait for the pop, wait for those buyers to try to buy the pullback. If they fail, we sell into their failure, sell the pullback, measured move again, 1, 2, 3. Or, right, we pop up, buyers hold the pullback, right? Buyers hold the pullback, run. Okay, we pop up, buyers hold the pullback, mark up that high, mark up that high, mark that low. Now we know where that sweet spot is, and we're buying off of that low. That will be a great setup, just got to wait for it. Now, what if this thing does one of these again, right? What if it really takes off to the upside? If it takes off and keeps going, it's that 1, that 2, and go. Just remember, though, you've got to get a real strong move higher for that, right? You've really got to get a strong move higher here. That way, it creates that sense of urgency. So you know that sellers, right, selling once, selling twice, buyers are going to jump all over them, right, as we get this run back higher again. It doesn't look like that's going to happen tomorrow morning, but hey, let's always be ready for it just in case we do. The hardest part tomorrow, though, will be if we sit here going sideways. If this thing continues here to sit around this 12,000, just wait for the pop, wait for the buyers to try, sell into their failure, or if the buyers are successful, which is unlikely but possible, mark up those, right, that new channel. We're buying that pullback up from there. Great lessons here tonight. And again, the big thing I want you to keep remember, kind of keep in mind here for tomorrow is, right, how would the rookie version of you, how would you have traded it, right? Where would you have gotten in or gotten out? Put yourself in the shoes of those rookie traders, right? Imagine for a moment you don't know about that range on the E-minis. Imagine you don't know, right, about that overhead resistance on crude oil. Think about some of the ways those rookie traders will get themselves kind of painted into a corner, right? I know I made a lot of kind of classic mistakes when I was a rookie. I'm sure you did as well. And so put yourself in those shoes and trade against them because you know better, right, in those situations. Again, we'll do it tomorrow, bright and early, 8 o'clock Eastern time. Got a lot to do tomorrow morning, so get there with me on time, 8 o'clock Eastern time. And don't forget, the easiest way to get registered is right below my ugly mug here tonight. Grab the advanced course. The advanced course is an unlimited membership. It's a lifetime membership. It includes all the beginner, intermediate, and advanced classes, the daily trade room, the daily training sessions, hundreds and hundreds of video lessons. You can log into your account and get started right now so you're ready for tomorrow morning's opening bell. If you're not ready yet to be a member, not to worry. I think we have, I'm biased of course, but I think we have the best free trial in the business. Our free trial offers the free trading course where you'll learn my 3-step strategy, my favorite entry setups, and hundreds of examples of how we applied that strategy right to our favorite futures markets. As also part of that free trial, you get the free pass to attend our trade room. And don't forget, sometimes those emails get stuck in your spam filter, so check your spam filter when you register for the free trading course. And as always, guys, don't forget, keep in touch. Call, email, use Skype, use live support. I'm always here to help every step of the process. Don't be a stranger. There's no question too big or too small. Call me in the office anytime you have any questions. But until next time, tomorrow morning, I'll see you there tomorrow at the opening bell. If not, let's do it again tomorrow night, same time, same place, shall we? My name is Joseph, by the way. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.